Carl Icahn, Donald Dell, and we've talked about this tracking stock again and again and again, but they had this tracking stock, and now they're going to try to go public, but in order to do that, they have to buy out the tracking stock, and they've got a value place in the Dell shares that Mr. Icahn doesn't like very much.
Yeah, let me break this down for you. It's very complicated. What it really comes down to is Michael Dell wanting to do something, and Carl Icahn, who has been a burr in Michael Dell's side since the initial take-private deal, Carl Icahn being like, not enough money.
Well, it's always the same claim, lowballing.
Yes, absolutely.
Mr. Dell, you're lowballing. You're saying, and he did that when he first took it private, that's right, and now he says they're doing it again.
Right. So that would be like 79, 77 a share, right? Versus Carl Icahn saying it should be 94 or something like that?
Or more.
Yeah.
And what's interesting here is that there are really two options. There's this complicated tracking stock transaction. There's also a much cleaner, okay, let's just take this thing public. Right. Let's take the whole thing public and see what the market is willing to pay for it, which Carl Icahn saying, you know, they're just blowing smoke if you think that that's an actual option. This is what they really want to do.
Yeah, but it's two titans going at each other. And
also, Silver Lake's involved too, because Silver Lake is into the takeover, right? So it's Michael Dell, Silver Lake versus Carl Icahn.
Silver Lake largely financed. They're going private, right?
Yeah.
And they want to try to cash out.
Absolutely. And Carl Icahn, I mean, there's a great quote in this story. It's a story worth reading first to understand this whole thing. But he also says, you know, I prefer peace to war, but sometimes it's time to go to war.
Really, does he though? I don't know if I believe that.